Hi everyone, I'm Alex Liu. I'm the publisher of Next Trade, a blog that covers equity investment in Malaysia. Now, over the years, I have received many inquiries on how I analyze stocks. Now, given the free resources in the internet, if you have a bit of training or knowledge and free times in your hand, I believe that you can analyze stocks on your own and build up your own portfolio of stocks. Now, with that in mind, I'm making a few videos to help you to analyze stocks. Now, I shall begin this by sharing with you how you can study quarterly result announcement. I believe that it is a very good starting point to begin the process of stock selection, because we can get a very quick insight into a stock in two areas, and these areas are the stock's financial performance and also its relative valuations, or in simple terms, how well is the company performing and is the stock cheap or expensive. Right, in this segment we shall look at the following areas. We will look at where to search for quarterly result announcement, and what to look out for, and what can we conclude after we have looked at the quarterly result announcement. Right, we shall begin with where to search for the quarterly result announcement, and the place to go for is a Bursa Malaysia website. Alright, we'll go to the website right now so that I can show you exactly how it looks like and where you can click to get the information. So this is bursamalaysia.com, the home page. When you're here, you bring your cursor to listed companies. Right, when you bring it down to the listed company, you will see a drop down menus. Bring it to company announcements, click on that. Alright, now if you click on company announcement, you will have all the announcement of the company arranged in chronological order. Alright, they are arranged in chronological order with the latest announcement on top. So what you want to do is to categorize them or sort them by category. So you're looking for quarterly result announcement. What you do is you bring the cursor again to select category. Right, you click on that, then you have a drop down menu. Quarterly result will be under financial results. Right, you click on that and you then submit. So when you submit, you will have the results arranged in chronological order. Right, the latest result will be on the first page, and this will be all the results of the company, the latest quarterly results. Right, so for example, we have on the December 23rd, the latest result comes from a company called Drive Properties Group. So what you do is you can click on this and open a new tab. Right, this is how it looks like. Right, now maybe just go through this. Right, you have the company's name, Tribe Property, and this would be for the financial year 31st January 2017, and this particular quarterly result is the third quarter result, the quarter ending 31st October 2016. Now you have the detailed result here, the financial statements, and also the notes to the financial results. Now what I want to share with you today is basically how to look at the abridged result, the summary of the result. These are the things that we will be studying today. Right, these are the abridged result, and by just looking at this, you get a very quick picture of whether the company is doing well and whether it is attractive or not. So I'm going to bring you back now to the PowerPoint. We shall move to the next slide. Alright, I have selected 3 examples. The first example we will look at is NLabs, the first quarter result for the financial year ending 2017. Right, you will see that basically there are 4 columns of numbers. Right, the first column is the current year quarter result, this one, and next to it you have the same quarter last year numbers, and the third column is the cumulative period for the current year, and next to it you have cumulative period for last year. Right, now this is the first quarter result, and that being the first quarter result, the cumulative period is essentially the first quarter. Now if you are looking at the second quarter result, for example, you'll be looking at the first quarter and the second quarter result added up in the cumulative period. Right, so let us zoom into NLab. Right, so because this is the first quarter result, we are essentially interested in these 2 columns of numbers. These 2 columns are exactly the same as this, so they make no difference to us for this analysis or quick study. Now, what are we looking at when we look at a quarterly result? Now, we'll be looking at financial performance when we look at the first 4 rows of numbers. Right, now the first row would be revenue. Revenue is sales, so it's very straightforward. Right, and the next 3 rows of numbers are profits, starting with profit before tax, and if you minus out tax, you will have profit after tax, and it's normally reported as profit or loss for the period. And if you minus out minority interest, you would have profit or loss attributable to the ordinary equity holders of the parent company. Right, what is minority interest? Is essentially the profit of the group that actually doesn't belong to the shareholder of the group. That would comes about when you have, for example, a subsidiary company that is not wholly owned. For example, if it's 25% owned by outsider, and that particular subsidiary makes a profit of 4 million ringgit. Now 25% of 4 million ringgit is 1 million ringgit, and that doesn't belong to the shareholders of the company. So that 1 million ringgit, you will minus it off to arrive at the net profit of the company. Now below this, you will have 3 more rows of numbers, and these are presented to you on a per share basis. Now they are presented to you in this way because it will enable you to compare them with the share price of the stock, and you can do quick calculations to arrive at a few valuation models that will determine whether the stock is attractive or not. For example, if you look at the 5th row of number, you will have earning per share. Earning per share is arrived at by taking net profit of the company at this number, and you divide it by the number of shares outstanding, and you would have earning per share. And dividend is similarly arrived at in that manner, but normally dividend is a number that is declared by the company, so it's very easy to just get the number. It is 5 cents or 10 cents or 5% or 10%. So this number easily can be obtained from the entitlement or from the company declarations announcement. So you will have this number, you plug it here. And finally, you will have the last number, and that is the net assets per share, or net tangible assets per share, or in layman term we call that the book value of the stocks. So if you have these three numbers, you can compare them to the share price to arrive at three different relative valuation model. For example, if you were to compare earning per share with share price, you can arrive at a price to earning ratio. I will show you a better example later on, because when you want to compare price of a stock to the earning per share, you have to use the full year earning per share. What we have here is only the first quarter earning per share. And similarly, if you want to compare dividend to the share price to arrive at dividend yield, you have to use the full year dividend. Again, we'll look at a better example. But if you compare the price of a stock with the book value here, yes, you can come to a conclusion whether the stock is trading at a fair premium or discount to the book value, right? So now we'll move on to the second example. The second example I've selected is Aeon Credit, second quarter for 2017, and that is the quarter ended 31st August. Now, this being the second quarter, your cumulative period will be not just first quarter like the earlier example. It will be the first quarter and the second quarter, so that will make it the first half. So what you have here is a current year cumulative period is actually the first half of the current year, and next to it you will have the first half of last year. So by looking at Aeon Credit, you can see that revenue increased quarter when you compare the two quarters. Actually, it is increased year on year for that particular quarter, but similarly it has increased year on year when you compare the first half of this year with last year, and the same result you will have when you look at the profits number. So what can you conclude when you have a quarter result that's improved? That is a positive. But when you have cumulative result that has improved over last year, is even better. So this will give you the kind of confidence that this stock is doing very well, right? Now we shall move on to our final example. Our final example is a full year result. It is the fourth quarter result for SYF. You will have 4 columns of number, and the last 2 columns of number would be the cumulative period, and it would be, in this case, for the current year, cumulative period will be the first quarter, second, third, and fourth quarter. And similarly, it will be compared to the first, second, third, and fourth quarter of last year, which is actually a comparison between this year performance and last year performance on an unaudited basis. So let us have a quick look at this result. We can see that when you make a quarter to quarter comparison, the company is actually doing not so well in terms of the profits. Profit actually dropped while revenue increased. But when you look at the cumulative period, what you see is actually something slightly different. Revenue increased, and so did the profits of the company. So it is not always very straightforward when you study quarterly result announcement. It can lead to example like this where you need to investigate further. Again, I want to emphasize that quarterly result announcement only give you a snapshot and at best it is a quick look at the company, and you need to investigate further into the company prior performance before you can do anything, draw any conclusion about the company. That would be sufficient to form the basis of you investing in the stocks. Now, earlier I said that we can look at a better example on relative valuations. So this would be a very good example to use, because this is the fourth quarter results, and it will give you the full year earning per share as well as the full year dividend per share. All right. So here we have earning per share for SYF of 6.3 cents. For that period, the company announced a dividend per share of 1 cent, and of course you have the book value of 46 cents. Now with this number, we can't do our relative valuation computation. Right, SYF fourth quarter 2016 numbers, and at the time the share price is around 53 cents. So PE ratio would be, you take 53 cents, there's a share price, divided by the earning per share of 6.3 cents. 6.3 cents is obtained from here, right? So you have 8.4 times. Now what 8.4 times means is that if you invest in this stock paying 53 cents, you know that it would take the company 8.4 years to earn that amount of money that is equal to the price that you paid for. Assuming that the entire amount is paid out to you, you can take that as a payback period. But of course, it doesn't happen that way, because the company will retain some of its earnings for future growth. So it is not a straightforward payback period sort of formula. Now the next number you can get from just looking at the fourth quarter result announcement would be the dividend yield. Now dividend yield would be the dividend paid out for the full year, right? In this case is 1 cent divided by the share price, and times 100% will give you the number 1.9%. 1.9% would be, well, what's the use of that? Basically, if you leave your money in the bank in your fixed deposit account, you will probably earn now interest around 4%. So instead, if you choose to invest in SYF, if the share price remains stagnant, at least you know that you will be making 1.9% in terms of dividend received from the company. It's not a lot of money. There are companies out there that pays out dividend of 4, 5, or 6%. Those companies may be more rewarding for you to park your money into, but there's a reason why you may want to choose a company that pays out a dividend yield that is less than the fixed deposit yield or rates. And the reason is that this company are conserving their cash to grow the company. SYF could be an example of that, but you can only come to that conclusion if you dig in further and do more analysis. Okay, lastly, you can come to the last relative valuation model, that is the price to book ratio. Now, price to book ratio, you need to know the net asset of the stock. Preferably, you want to use net tangible assets, but most of the quarter result announcement you can get from Bursa Malaysia would give you only net assets, but that is good enough. This is a quick check computation. So what you have is, you just have 46 cents book value. You take 53 cents divided by 46 cents, and it'll give you 1.2 times. 1.2 times basically tells you that you are paying a premium of 20% over the book value of the company. Now, if you choose to build a company exactly the same size as SYF, having the same fixed assets, having the same working capital investment, right? You would need to have you have to put in 46 cents for the same number of shares issued by the company, whereas now it is now selling at 53 cents. And you may say that, well, I'm paying a premium for these stocks, is it worth it? You see, that's the thing, because most of the time we don't want to pay premium, but sometimes the reason why premium exists is because there is a goodwill to this company. It has built up a reputation over the year. Some company, take for example, well-established company like Nestle, is trading at the price to book ratio of 25 times. It has a lot of goodwill. It has a lot of brand royalty in the products that it carries, like Milo or Nescafe and so on. On the other hand, you will also have some property development company today that is trading at a book value of 0.6 or 0.5 times. That is to say that these stocks are trading at a discount to its book value. Right? Why? The reason is because the property development sector is now in a doldrums. So it's not a very simple conclusion to draw, but it is something that you look for. So with that in mind, you'll find that SYF is a relatively inexpensive company. Unfortunately, it pays low dividend and is trading at a slight premium, and that means that you need to really look deeper into this company to justify why you should buy into these stocks. If your friend asks you to buy into the stock, or if you're having the stock, why you should continue to hold the stocks, right? Now, we come to the end of these sessions. So basically, we study quarterly result in order to ascertain the company's financial performance and the stock's relative valuations, and hope that with that quick look at the result of a company, you will come to a conclusion whether you want to go in depth into the stocks or not. Bear in mind that there are about 1,000 stocks on our exchange. You have to do this relatively quickly before you want to examine more into the stocks. Right. Now, in the next video, we will study financial performance in a greater depth. We will look at how to construct an 8-quarter table to make a comparison between the performance of the company this year versus last year, so that we can actually make a better judgment on the stocks. Right? If you like to follow me on my market call, please check out my blog Next Trade here, and you will see how I use what we have discussed in my analysis. Right. Thank you so much for listening, and I hope that you will check out my next video, which I hope to produce next week. Thank you.